Hey friends, welcome to the Singapore Market Digest for Wednesday, May 28th, 2025. I'm Iggy from the Investing Iguana, and today we're diving into what's been happening on the SGX. The Straits Times Index has been showing solid momentum this year, and we're seeing some positive developments across different sectors today. Let me walk you through the key stories that are moving the market. First up, let's talk about OCBC Bank, one of Singapore's banking giants. The stock closed 0.9% higher at $16.31 on Tuesday, and there's a good reason for this uptick. The bank just announced some major leadership changes in their global wholesale banking division on May 27th, and these changes are set to take effect on October 1st. Here's what's happening. Elaine Heng, who's currently OCBC's Group Chief Strategy and Transformation Officer, will be stepping up to replace Linus Goh as head of Global Commercial Banking. Goh is retiring on September 30th after spending more than 2 decades with the bank. What makes this transition particularly smooth is Heng's impressive background. She joined OCBC in April 2024 and became Group Chief Strategy and Transformation Officer in November. Before joining OCBC, she was CEO of Retail Business and Deputy Group CEO at Fair Price Group, and she spent almost 2 decades in the banking sector. This kind of smooth leadership transition usually signals good succession planning and organizational stability, which investors love to see. OCBC has been performing well fundamentally, offering a forward dividend yield of 5% and trading with solid analyst support. The bank paid out $1.01 per share in dividends for 2024, representing a 60% payout ratio, which shows they're committed to returning value to shareholders. Now let's shift gears to Amara Holdings, a hotel group that's been making headlines due to a takeover situation. Shares closed up 1.1% at 90 cents on Tuesday, and here's why that's significant. The independent financial advisor appointed for the takeover bid has just deemed the offer at 89.5 cents per share to be fair and reasonable. They're advising the company's independent directors to recommend that shareholders accept this offer. This takeover offer came from a consortium led by property company Hua Hong back on April 28th. The 89.5-cent offer values the hotel group at about $514.6 million and represents a 27% premium over Amara's closing price before the trading halt. What's interesting is that shares are trading at 90 cents, which is slightly above the 89.5-cent offer price. This suggests the market might be expecting either a higher bid or some other positive outcome. The company has already lost its free float as of May 15th, which means SGX will suspend trading of its shares at the close of the offer on June 10th, since less than 10% of the company's shares are now held by the public. This is typical in takeover situations where the acquiring party has already secured a significant stake. Finally, let's talk about Valuetronics Holdings, an electronics manufacturing services provider that just reported some really solid results this morning. The company posted net profit of 79.9 million Hong Kong dollars for the second half, which translates to about 13.1 million Singapore dollars. This represents a 3.1% increase from the same period last year. But here's where it gets even more impressive. Revenue for the half-year period jumped 11.4% to 866.9 million Hong Kong dollars. For the full year, Valuetronics achieved even stronger performance with net profit growth of 4.3% on revenue of over 1.7 billion Hong Kong dollars. The company has proposed a final dividend of 11 Hong Kong cents per share plus a special dividend of 8 Hong Kong cents per share, bringing total dividends for the year to 27 Hong Kong cents per share. What's really impressive about Valuetronics is its financial strength. The company has no bank borrowings and holds cash and cash equivalents of over 1 billion Hong Kong dollars. That's a pretty strong balance sheet in anyone's book. The stock closed 2.9% higher at 70 cents on Tuesday before these results were announced, so we might see additional movement as the market digests these strong numbers. With a market cap of around 270 million Singapore dollars and trading at a price-to-earnings ratio of about 10, it represents solid value in the electronics manufacturing space. Looking at the broader picture, Singapore's market is showing real resilience. The Straits Times Index is currently trading at attractive valuations with a forecast price-to-earnings ratio of 12.2 times and a dividend yield of over 5.5%. These represent significant discounts to long-term averages, which could present opportunities for value-oriented investors. What we're seeing today reflects some of the key themes in the Singapore market right now. We've got established banks like OCBC managing leadership transitions while maintaining solid fundamentals and generous dividend policies. We're seeing corporate activity in sectors like hospitality with the Amara takeover situation, creating value for shareholders. And we've got manufacturing companies like Valuetronics showing resilient performance and strong cash generation despite challenging global conditions. The combination of steady dividend yields, reasonable valuations, and ongoing corporate activity suggests that Singapore's market continues to offer compelling opportunities for both income-focused and growth-oriented investors. Whether you're looking at blue-chip banks, corporate action plays, or solid manufacturing businesses, there's something happening across different sectors of the market. That's the scoop for today. Remember to do your own research before making any investment decisions. This is Iggy from the Investing Iguana, signing off.